Today, thanks for watching. I'm working more today on my stock market project. So before I get into it, I'll go over the goals of the project, what I've done so far, and finally what I'm going to be working on today. So here we go. Yeah, so HRP bought back test with scaling using first principles params. So I never put that in, but yeah, basically just a sec. Let me go up. Here is the outline for the model. So yeah, so I have two goals. First goal is beat the S&P 500 by a significant margin and stay market neutral. So the S&P goes up on average 6% per year. I want to do significantly better than that, 3 to 4 times that, 18 to 24% per year. I also want to stay market neutral, so it shouldn't matter whether the market as a whole is going up or down. This strategy should be consistent regardless. So because of that, I'm doing a long-short strategy. And this is the basic outline for the model. So I'm starting with the stock universe. I found a good free data source which has data going back to 2011. Out of that data, I'm isolating a universe of stocks. So something like the S&P 500, you want to train it on similar things and leave out things that are going to be hard to train on. So I'm trimming out penny stocks, low volume stocks, ETFs. I'm only using common stocks, real estate investment trusts, and ADRs, which are foreign companies listed on the U.S. market. Once I have a universe, I'm then using that to train a returns model. It's predicting something like returns relative to the market, returns relative to sector. It turns out I'm predicting Sharpe ratio because I got a good model with that. And then the final step is to incorporate this into a portfolio level model. So I started at the end of last year. Here's where I was at the end of January. Basically, I had something going, but it wasn't robust enough to implement live. I went through, I cleaned up the code. I should say here, my second goal. So I'm writing all of this in Python. My second goal is to generalize it and make a tool that anyone can use to create any sort of model for themselves. And the requirement, I have a requirement on this, which is that everything should be free. So in the pursuit of doing that, I cleaned up the code base. It's now really clean, tight, usable. You can use it. I'm defining a universe and creating a model in under 100 lines of code. Now, let me go to the model I had previously. So, model 22. Here are the results. And so I was really confident in this. I thought this was a great model, and here's why. I started out just training a single model, so training it from 2011 through 2019, validating, tuning the hyperparameters from 2019 through the beginning of 2023, and then I tested it from mid-23 through beginning of 2026. And so here are the results from the test. The information coefficient, I want 0.01 to 0.02. I'm getting 0.04, so much higher than my goal. That's giving me the predictive power of the model. So the model is beating the predictive power metric that I have. And so from that, I can assume this has sufficient predictive power. The standard deviation of the information coefficient should be 3 to 13 times the information coefficient. That's what we see here. Information coefficient to information ratio on a daily basis should be 0.03. I'm getting 0.3, so larger by an order of magnitude. On an annual basis, it should be 0.3. I'm getting 2.3, so once again, larger by an order of magnitude. In the t-statistic, I'm going for 1.98. I'm getting 3.75. So again, much higher. And then when I look at the decile analysis, so the hallmark of a good decile analysis is the bottom decile, the bottom 10% should be the worst performing, which you see here. The top decile, top 10%, 90th, basically 90 to 100%. should be performing the best, and in between it should be monotonically increasing. So each decile should be higher than the previous decile, and that's exactly what we see here. And so for those reasons, and finally I did it on a walk forward model. I trained a new model for each year to see how the strategy performed, and the information coefficient never fell below 0.01, the lower end of my goal. And in fact, it only fell below 0.02, the upper end of my goal, 1 year in 2018. So for these reasons, this looks like a really good model. However, I'm not able to get a portfolio model to work well on this data. So it works really well from 2023 onwards. When I try the same model going back to 2016, it's failing from 2016 through basically the beginning of 2022. And so I was looking at the decile analysis for each model in the walk forward, and I kind of think it might not be good enough for early years. So I'm going through and training a different model. This is, I incorporated hierarchical risk parity for the bet sizing. Going long on the top 10, short on the bottom 10, and seeing how does it perform. And yeah, basically I've been having a hard time getting a good model to work. So I optimized the model parameters, the portfolio level parameters. I optimized from the beginning of 2016 through mid 2018, and then I tried to see how does it do after that, and it does well during that region, but pretty poorly afterwards. So that's kind of the problem I'm having. If you look here, you can see that when the model starts to perform better is when this dispersion increased. And so that's what's going on in recent years since mid-2023. And I think that might be the reason the model looked so well. So I retrained a new model by dropping out all of the parameters, keeping only the parameters that were performing really well. And these are the results once I dropped out those parameters. So yeah, I have to put in the other plot here. Oh, but it's not saving it as a plot. So yeah. Alright, so if we go to Portfolio Explorer, we have test scaled HRP on. Every time you placed a bet, still damn good. No one's gotten to you yet. Every time, Model 23. You were quicker than they thought. It's always when cars will never do you wrong. Alright, so let's do it on here. Actually, let's comment out that guy. Still the same. Built up with you yesterday. On the charm. Ever enough to get you by. You're still the same. Alright, so let's see how this performs now. Yeah, so I can't get predictions. I need to get walk forward predictions. So what line was that on? Basically this isn't gonna work for both. I need to get it to work for both. But real quick, I have to go to the bathroom. I should have gone to the bathroom before the stream started. But I'll be right back. Oh yeah, so I have to rewrite this now. To make sure that it works still. Portfolio. So is it All right, what line? 197, 157, 47 in portfolio. So it's happening when I'm reading in the portfolio. I mean, that's... I'll just rename this to predictions. So it has to be a feather also. So I just need to go here. That's taking a long time. info. Yeah, so everything's different in the new walk forward, so nothing's saved the same, so it's kind of hard to do the same test, so probably I'm gonna have to run it again. Oh, my mom's calling me. Well, I'll wrap this up tonight because basically I'm just gonna redo this walk forward, which is gonna take maybe half an hour or so. So I'll do another stream later today.